A geopolitical fever just broke in pre-markets that's now circulating through every equity index. The VIX is running hot at 16.9, while spec leaders are coughing into the red. But semiconductors are singing a different tune. What triggered this divergence between defensive and offensive sectors could define the next week of market health. The data is screaming that speculative capital is cooling off, not fleeing. ARKK shed 0.94% while MAGs dipped 0.69%, but SPHB actually gained 0.34%. The consensus among the Canary community indicates speculators aren't panicking. They're selectively rotating out of consumer discretionary exposure, where XLI dropped a full 1.5%. This is a controlled fever, not a cardiac event. Our metrics confirm credit stability holds despite headline noise. High rose 0.05%, while HYG and HYGW both flattened to negative territory. The yield curve isn't breaking, just breathing harder. This tells us the market's circulatory system is functioning, even if blood pressure readings are elevated from geopolitical stress. The indicators are signaling fear at 16.9 but rising fast. A VIX gain of 4.77% in a single session. UVXY gained 1.15%, matching VIXY and VXX across the board. This synchronized rise means panic is spreading uniformly rather than concentrating on one sector. The temperature is climbing, but the heart rate remains steady. The engine sector reveals the true vital signs. SMH surged 2.97%, while Carry crashed 2.27%. Semiconductors are humming at full capacity. Broadcom's valuation signals suggest AI infrastructure investment continues expanding. But regional banks, Carry, exposed themselves to yield curve compression, proving even core tech isn't immune to macro rotation. But that's not the real danger. Defensive sectors underperformed as expected. GLD dipped 0.34%, while TLT and bond barely moved negative 0.19%. Investors aren't fleeing to safety. They're hedging within the portfolio. XLP dropped only 0.53%, showing consumer staples haven't cracked open yet. The immune response is localized, not systemic. The hero portfolio faces a multi-sector infection. Geopolitical fever meets credit stress. But SMH's 2.97% surge proves the real economy can outperform defensive hedges. The villain isn't inflation or earnings. It's uneven sector rotation, where KRE and XLEY exposed themselves to macro headwinds, while semiconductors built immunity through AI demand. The Canary dashboard shows we're in a controlled recovery phase. Fear is rising, but the pulse remains steady. Hold your core positions. Let SMH lead the immune response while watching KRE for warning signs of broader financial sector weakness.